Good morning, everyone. Today we are going to talk about a topic that is foundational to the global financial world: accounting standards. Specifically, we will be discussing the International Financial Reporting Standards or IFRS and its relationship with the American Generally Accepted Accounting Principles or GAAP. This is also a global financial language. Imagine a world where every country spoke a different language. Trade would be difficult, communication would be slow, and trust would be hard to build. The same is true for finance. Before the widespread adoption of international standards, comparing financial statements from a company in Germany to one in Japan was a complex and often unreliable task. This is where IFRS comes in. It's a set of rules and guidelines for financial statements created to establish a common accounting language. The goal, as the International Accounting Standard Board IASB puts it, is to bring transparency, accountability, and efficiency to financial markets around the world. The standards are designed to bring consistency to accounting practices, making it easier for investors, regulators, and other stakeholders to understand and compare the financial health of companies globally. This fosters trust, encourages international investment, and ultimately helps improve the global allocation of capital. Now we see the evolution of international standards. The journey to IFRS began with its predecessor, the International Accounting Standards IAS, which were first issued in 1973. However, in 2001, the IAS International Accounting Standards were replaced by the IFRS or International Financial Report Standards. Under the newly established IASB or International Accounting Standard Board, an independent body based in London. Since then, the adoption of IFRS has been remarkably widespread. As of late 2023, 160 out of 168 jurisdictions have committed to these standards for their domestically listed companies. This includes the entire European Union, Canada, India, and many other major economies. This broad adoption makes IFRS the most used set of accounting standards globally. For companies with international operations, this standardization is a game changer. It significantly reduces the reporting and regulatory costs that would otherwise be incurred when dealing with multiple different accounting systems across various countries. What is the rival system? GAAP, Generally Accepted Accounting Principles in the United States. While IFRS dominates the global landscape, it is important to note that it is not the only system out there. The United States, for instance, operates under a different set of rules called Generally Accepted Accounting Principles or GAAP. GAAP is a rule-based system developed and frequently revised by the Financial Accounting Standard Boards FASB. Its purpose is to ensure consistency, accuracy, and transparency in financial reporting across U.S. industries. Public companies in the U.S. are required by the Security and Exchange Commission follow GAAP when preparing their financial statements. So, is IFRS better than GAAP? Is the question. It is not a matter of one being inherently better. They are simply different in their approach. IFRS is often described as a more principle-based system, offering more flexibility in its applications. GAAP, on the other hand, is much more rules-based, providing very detailed and specific guidelines. Moving towards convergence. For over 2 decades, the IASB and the FASB have been collaborating on a project to improve and converge their respective standards. This is a complex and lengthy process driven by the desire to further harmonize global accounting practices and make financial statements even more comparable. While the US has not mandated a full switch to IFRS, it's clear that the push for global standards is a major theme in modern finance. Understanding the difference between GAAP and IFRS is crucial for anyone involved in finance, especially in a world where trillions of dollars are invested across borders every year. The bottom line. The International Financial Reporting Standards (IFRS) are accounting rules for public companies with the goal of making company financial statements consistent, transparent, and easy comparable around the world. This helps with auditing, tax purposes, and investing. This is the end of lecture. Thank you very much for watching my video.